Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live, the first 2019. I'll tell you, it's been a little bit of a choppier week. We've seen the 10-year Treasury yield coming down. We'll talk about all that in just a couple minutes. I do want to talk a little bit first about well, let's go through the agenda first, and I'll give you a quick update on an upcoming event that I want to talk about. But you can see today, we're going to go through daily market recap, earnings spotlight, upgrades, downgrades, as we generally do each morning, and then go into the SCTR Movers. Turning point, that's a segment where stocks get to a certain level. You either expect them to turn or maybe we see them turn. Just want to show you from a technical perspective what I look for in terms of turning points on charts. And then we'll wrap up the session as we always do with three you must see, three charts I think are worth noting as we head into a new trading day. I do have an upcoming event, though, that I want to talk about, and that is the Market Vision 2020. This is going to be held Saturday, January 4th, 2020. We've got a list of speakers. They've been announced. It's really important to register for this early. We do have 6 mini series events. They're going to be educational events, very similar to what you're seeing here. It's going to be a kind of a webinar. And our first mini series event is going to be this Friday, and it will feature Mary Ellen McGonigal, one of our speakers. So she's going to teach you a little bit about how she looks at the market. And it's really a session just kind of get to know our speakers before we have the event on January 4th, so you understand their styles. These mini series events are free, but you do need to register. So you can go to the Market Vision 2020 tab once you get to earningsbeats.com, and you can enter your name and email address. And by doing that, we'll update you constantly with news, updates, educational events, these mini-series events. There will be a ton of free giveaways and a whole lot more. So when you get to the, let's see here. I want to show you what it's going to look like. So when you go to earningsbeats.com and click on the Market Vision 2020 tab, this is the page that you will see. All you have to do is type in name, email address, and we will begin to send you updates. We normally send out a couple a week, talk a little bit. We're going to have some fun with this. Going to give you some information on each of the speakers. As I said, there's going to be giveaways. You don't have to buy a thing. You don't have to give your credit card. All you have to do is register by putting in your name and email address. So I just wanted to mention that. I'll be talking about this quite a bit through the rest of the year end. I want to make sure everybody has an opportunity to learn more about this and hopefully attend. Again, that'll be on Saturday, January 4th, 2020. It'll start early in the morning, probably 9 o'clock a.m. Eastern Standard Time, and go until probably 5 or 6. And if you can't make it, or if you can't make portions of it, no problem. Everything's going to be recorded. All right, let's move on. I want to go into the major market indices, give you a look at what happened yesterday. So let's do a little quick recap. First, just want to point out that the Dow Jones, actually, let me just give you this update for the 10-year Treasury yield over here. The Dow Jones was down 112 points yesterday, so down 0.4%. You can see the S&P 500, NASDAQ, and the S&P 600 small cap all fell by a somewhat similar percentage, a little bit steeper losses on the NASDAQ and the small cap index. Technically, I don't really see anything bad here on the chart. You can see the PPOs were rising. So normally when we get these pullbacks after the PPO rising, I look for the rising 20-day moving average to hold. So I think maybe we're going to pull back here a little bit historically. I think many of you who follow me and have followed me over the years knows I'm a historian. And I've gone back and studied the market quite a few years. And the S&P 500, I've got an Excel spreadsheet that goes back 70 years with the data each day. And I can tell you that the 19th through the 25th of all calendar months have annualized return of a minus 5% on the S&P. This dates back 70 years. And so it's just 6 days out of the month, but it's 6 days out of every month. So it's worth noting a lot of times you get past option expiration, and that week following can be pretty bearish. So you just want to keep that in mind. This is not unusual to see a little bit of a pullback this time of the month. 10-year Treasury yield did go up a little bit yesterday. Actually, is up a little bit today, I should say. It's up 1.9 basis points, almost 2 basis points, 1.76%. I'm going to show you an interesting fact here on the 10-year Treasury yield in just a minute. As far as some of the areas of the market yesterday, energy had a really strong day. Crude oil prices surged, and you can see energy putting in a nice reversal off this downtrend. Then we had the one of the oil industry groups, you can see, having a really strong day, led by Schlumberger. Schlumberger's got a nice little uptrend going here, and it looks like maybe we're going to come up in the short term, test this overhead resistance around 37. I would not be surprised to see it go through. I think a bigger level is going to be up near 40. Materials on the opposite end of the spectrum, you can see actually down 1.25% yesterday. And then one standout stock, actually, you can see this Schlumberger up 5.33%. That was the second best performer in the S&P 500. The best went to Target. Target reported their earnings. They really blew away the numbers, especially their bottom line number, $1.36 versus $1.18. They raised their guidance, and you can see the market loved the report. Stock up more than 14% yesterday. All right, as far as the yield goes, I wanted to just give you a couple of things here. First of all, we did see initial jobless claims come in today higher than expected, second week in a row, 227,000 versus 217,000. A couple of reports coming out at 10 a.m., so out in just a little less than an hour. October existing home sales will be out 5,480,000 units. That's the estimate. And then also October leading indicators expected to decline 0.2%. Both those reports coming out again around 10 a.m. Eastern. Taking a look at the 10-year Treasury yield here, and I'm going to just update this first chart for you. Make sure we got the latest here. Okay, I broke this down. This is a 3-month hourly chart. And what I just wanted to point out to you is how the market is reacting, how the stock market reacts when the 10-year Treasury yield goes in each direction. So here you can see the 10-year Treasury yield climbing and the S&P 500 climbs. 10-year Treasury yield goes down. We go sideways and then kind of go down a little bit. Then we get into this rally on the 10-year Treasury yield again, moving to the upside. Look at the S&P 500. Remember, when the yield's going up, money is coming out of Treasuries. The price of Treasuries and the yield are inversely correlated, 100% all the time. So when the yield's going up, it's telling you that money is rotating away from Treasuries. People are selling Treasuries. Well, in a bull market, that money goes into equities. So as the Treasuries are sold and the yield is rising, you can see the S&P 500 rise with it. Well, over the last week and a half or so, we've been seeing a decline in the 10-year Treasury yield. But look at the equity markets trying to go higher. Now, since the top, we've gone pretty much just sideways, but we've tried to go higher, even though the yield's falling. The reason I bring this up, when you look at how the market is trading, it's completely different than back when we were in the bear market, 2007 to 2009. So I went back and I just wanted to point out periods when the 10-year Treasury yield was falling and rising. This is the end of 2007. Then we go through 2008 and then the early part of 2009. So this is basically the entirety of that bear market, October 2007 to March 2009. Now, the red, this is kind of like stop. This is like, okay, you want to, when the yield starts moving down, you want to be out of the market. Now, when the yield bottoms and starts moving up, then you can see the market just kind of went sideways here. Then we had another drop, and the market, S&P drops with it. Then we had this nice little rise in the yield for about 2.5 months, almost 3 months. And you can see the S&P went up a little bit, but really from start to finish, it wasn't really up much. In today's market, if we had this kind of a move in the yield, we would see I believe we would see the stock market explode. But that was not the case back then. It's a completely different relationship right now. So then we had the yield falling, S&P falls. We have a little bit of a pop in the yield, the S&P falls. The yield falls, the S&P falls further. Even when we rallied back at the beginning of 2009 on the yield, that's a really nice rally. The market falls. We go back down one more time, and the market ends up setting its bottom in March of 2009. The reason I bring this up is it's really important to watch how the stock market reacts to what's going on in the bond market. And right now, the way it's reacting, again, when we get these moves to the upside, we get explosive moves in the stock market. This rally right here for 1 month in the yields sent the S&P 500 up more than 200 points, probably about 225 points. That's a huge rally in the S&P 500. Money is rotating. That money coming out of the bond market is going into the stock market. During a bear market, it goes into cash. Big difference. All right, let's see. Just go over a couple of more charts here quickly. XLE. Wanted to just mention the XLE, nice little reversing candle. At the bottom in early October, you can see a clear-cut piercing candle. That off of a downtrend is a bullish reversing candle. And we did end up moving into this uptrend. I think we just got another one yesterday, and we're getting close to that 58 support area. So I would expect to see energy continue to move up. Crude oil is up fractionally today. I mentioned also the stock Schlumberger, SLB. This is what I look for now. We're downtrending, and it's still in a downtrend, even though it had a great day yesterday, and I said I thought it could make a run up here. We've got a double bottom in play. This high in between that double bottom is really important. If we can get back up and take out this 40 to 41 resistance area, then I think Schlumberger could bottom. I think it could be a much more significant bottom here. If we can't take that out and start to roll back over, we need to watch that double bottom. We don't want to lose that. All right, Target, I mentioned they came out with their solid earnings. Just want to show you these continuation gaps. We had a nice uptrend here, continuation gap, move to new highs here, continuation gap, new highs here, another continuation gap. Target looks really strong to me. I think it continues to go higher. Will it fill this gap? I don't know. I think a lot depends how it trades the next couple of days. If it comes back down, then I think you have a better chance of filling the gap. Longer term, though, a few months out, I see Target higher. Lowe's, remember Home Depot came out with a bad report, went down, took the home improvement group with it. Well, Lowe's came out yesterday and actually had a better day, although I don't like this candle short term. I would suspect maybe we'll see a little bit more short-term selling. And if we can hold gap support in the 20-day, then Lowe's may go a little bit higher. Also wanted to mention one big news event out this morning, and that is that Charles Schwab has announced they are going to buy, or at least they're, I don't know if it's been confirmed, but the reports are that they're going to buy TD Ameritrade for $26 billion. That is going to make a huge company that will have over $5 trillion in assets. So this is not a little deal. Both the stocks up in the pre-market. I'm going to see if I could just give you a quick quote. While I'm doing that, we can move on to talk about, we'll get into earnings. The first earnings, by the way, is that I want to look at is Macy's. Still waiting to see what this number is. Both companies, by the way, Schwab and TD Ameritrade up nicely today. Schwab is up $6, 13.4%. And TD Ameritrade is up 24%, up $10 right now to 51.40. So huge news for both those companies, and really nice reaction there. E-Trade, by the way, down on that news, as you might expect. All right, Macy's in this downtrend, sideways consolidating. They came out with their earnings. Stock is down 4% in pre-market action today. They did miss on their top line. They beat on their bottom line, 7 cents versus 1. But the problem is they guided their fiscal year 20 revenues and earnings per share lower. So we'll see whether or not we can hold on to that support that you see down here at the bottom. We've been down here a couple times around 14. Right now in pre-market, we're trading at 14.38. So at least we're holding it at the open, which is maybe a better sign, certainly a better sign than if we lost support at the open. All right, next up with earnings, give you another one here. PLAN. This is Anaplan. It's a software company. Stock, I think, has looked pretty decent. It's in a good group. You can see the relative strength has been declining, but it was very strong a few months ago. We've seen so many companies in this space just getting trounced the last 3 months. Some of them, though, are starting to come back, and Anaplan is up 14% pre-market. It's up to 56.01, so all the way back up here. not far from this double top. I suspect maybe we'll go up and test it and then probably pull back. I look for more consolidation. So I would really respect this double top up at 60, but we are getting a nice response here for sure. One other I'll mention from last night, and that is L Brands, LB. I wrote about this one in the Earnings Beats Digest newsletter. That's our free newsletter. You can sign up over at earningsbeats.com if you're interested. But it does, I write something 3 times a week, Monday, Wednesday, Friday. And I just pointed out, I had pointed out back in August, L Brands was just not trading well heading into earnings. It gapped down, continued moving down, came back up, filled the gap, and so far has been holding this support level. But still, that's not a good look when the overall apparel retail group's been going higher. So LB really struggling here on a relative basis. They did miss top line, matched estimates bottom line, 2 cents, but they guided higher. They guided their fourth quarter earnings per share higher. So the stock is trading higher in pre-market, not much, $16.39. So we're still up in here, still in this downtrend, but just wanted to point that one out. Stock just continues having trouble getting out of its own way. All right, let's move over into upgrades and downgrades. Just wanted to talk quickly about a couple of stocks here, give you my opinion on the upgrade and downgrade. I'm going to focus on some of the semiconductors. The first one is upgraded. This is Kulik and Salfa. After gapping up, this was earnings related, came down. So far holding this support area, I wouldn't be surprised to see it make another run back up toward the upper end of this range. So I'm going to say 27 down to 22 and a quarter is your trading range. I kind of agree with this upgrade. I would suspect that KLIC is likely to move up and go back up and retest those highs. Downgrades. There were a couple here in the semi group. Advanced Micro moved to a sell. Pretty surprising there, and not only AMD, but also Applied Materials moved to a sell. KLA Corp moved to a sell. You're probably catching my drift. I think this is going to be a tough day for the semiconductors. I actually disagree with the downgrade. I think these stocks are incredibly strong. And we'll talk, I'm going to be talking about semiconductors a bit more later in the show. But yeah, I mean, these stocks are overbought. Maybe are they a little high on valuation after everything you've seen here? I mean, Applied Materials less than a year ago was under 30, and now it's over 60 or around 60. So you've got a doubling of many of these stocks. AMD, looking at that chart, you can see the stock was $28 at the beginning of October. Just here in the last couple of days, it's been up near 42. That's a 50% move in about 6 weeks. I don't know about moving them to a sell, but a little profit taking here on many of these semiconductors wouldn't be a bad thing. All right. Well, that is all for the upgrades and downgrades, and we're going to be right back after this message. Okay, welcome back, everybody. We are going to move into scooter movers. I actually set, and I'm not really going to look at too many charts here. I just want to show you from a stock charts configuration standpoint. If you notice up here, this little gears, if you click on that, you can then select additional data panels, scans and alerts, chart list panels, commentary, and so forth that you can have on your dashboard. But if you unclick this data panel here, it's gone. We just lost my scooter mover. So in order to get those scooter movers on your dashboard, you have to make sure you have this additional data panel checked there. So you save the preferences, and then you have choices that you can make. I use the scooter reports, but you could have sector summary, market movers, ticker cloud. I mean, if I just show you that real quick, this gives you an idea of what other stock charts users are requesting in terms of charts. So if you're wondering, what's going on in the stock market, this is generally a pretty good idea. Just by quickly looking at this, it'll tell you what other stock charts users are interested in. Predefined alerts, DP signals, all kinds of different things. But I like the scooter reports, and I put them in all three. I could do a group. I could group them differently, but I like large cap, mid cap, and small cap. And then you can choose low 10, top up. A lot of times I'll have it on top up and top down, because these are just telling me which ones are moving faster in terms of their scooter scores relative to other stocks in their among their own market cap peers. So HOLX, for instance, moved further to the upside with its scooter score than any other large cap stock. So that's why it's listed, and it can be an idea. I mean, it could be a trading idea. So, Lowe's, I talked about the earnings. They came out with the earnings, and you can see making a pretty good push here in terms of both price and scooter to the upside. So there's a lot of different reasons, to take a look, but sometimes I'll just go through and look at these mini charts and just get a sense of, is there anything that maybe has been going sideways and is breaking out? That might be one thing that I would do. And then same thing with the mid caps and small caps. Now, when the market's pulling back, sometimes I tend to use this a little bit more just to see if these are the ones that are moving down the most. But if this one's moved down, say 14 points, and it's a 51 scooter now, that means it was 65, 66 before. So that's probably not a bad stock. And you can see it's been up, moving higher, pulling back, and then it can create some opportunities, maybe the 50-day moving average. But anyway, just wanted to point that out, that you can set up this, you can set your dashboard up so that these scooter reports display prominently right here on your go-to page. The other thing I'd point out with Scooter Movers is over here under Member Tools. If you go down to Summary pages, after you got Market Summary, Sector Summary, Industry, Cryptocurrency, here is your scooter reports. And you can manipulate this. So I've got the large caps. I can go from bottom scooter to top, or I can go from top to bottom. Here's the change. So those top 10 changes that we just looked at, here are some of the changes. There's your positive. There's the HOLX I was just looking at. But it gives you all of them, not just the top 10. So I can go down below some of the others and see what else is moving. So it's another way to do it. And then you might say, well, Hologics and medical supplies. Let me just see all of the medical supplies companies that are large cap. And here you go. And you can see whether or not the entire group is seeing big moves or whether it's just one company. Anyway, I just thought that was kind of interesting. Wanted to point that out. All right, next up, let's go to Turning Point. I mentioned earlier that Turning Point is really just a way that I look at the charts technically. I'm looking to see whether a stock is at a turning point. If I own a stock, for instance, and let's see, if I own Las Vegas Sands, let's say for whatever reason I liked it on this breakout and really thought that it had a good chance to take out these tops and maybe make a move all the way up here to this July high. So if I bought Las Vegas Sands at about 57 and change, 58 on this move, and I'm fortunate enough to get this all the way up here to the 64, this right here is a potential turning point to me because it is hitting an area where sellers came in before. You can see on this move down, volume actually picked up a little bit. That's where the sellers were. So when you get back up there again, you're not the only ones looking at these charts. You got a lot of other folks looking at these charts as well, and they see that there's gap resistance. They see that there's price resistance. And if I annotate this pretty quickly, you will see that we can use this tool, which is one of my favorite tools, the support resistance line. That's the one thing in the annotation tools I would not want to ever lose. I love this tool. But you can just quickly see that the stock went up. Actually, intraday went up and broke out before reversing. That's usually a sell sign for me. So Las Vegas Sands was at a turning point just above that 64 level. Now, of course, it could go through. And if it did, you could always buy a stock back, or you can just move on to another trade. But the point is, if you know you're getting close to an area of resistance, take your money. As a short-term trader, think about taking your money. One other stock I'll show you, Turning Point, and we'll move on to the three you must see. But here's another one, International Paper. Now, this one you can see going back even further. Look at all of these tops just above 46. Should we be shocked that the stock went down 1.6% yesterday after hitting 46? I don't think so. I mean, we've had a lot of tests up here at this area without the ability to break above it. Now, maybe this will be the time, and that would be very bullish. The more tests of resistance you have, the stronger that resistance is. The more times the sellers have won out, and the more times I would expect the sellers to continue selling at that level. So let's watch 46 to the downside. If this truly is an uptrend, we should bounce off that 20-day and then break out. But first time getting up there with all of these sellers and all of that resistance, I think it's definitely time to pull the trigger, take your profits, and move on to something else, or wait to see if international paper. That's the other thing. I mean, you sell at 46, you can always buy it back at the 20-day to see whether or not it holds there. And if it does, goes back up, maybe that would be the time you might want to hold, see if you get a breakout. All right, let's move on to our final segment, 3 you must see. This is always one of my favorite areas, just because I like to bring up stocks that, to me, have some kind of technical significance. The first one I'm going to bring up here is, I mentioned semiconductors earlier, and I was going to talk about them again. Well, this is what I want to talk about. Semiconductors, when they move fast. Back at the end of May, this group was down below 3,100. We just went above 4,100. That is 1/3. That's a 33% increase here in what, 1, 2, 3, 4, 5, less than 6 months. That's a huge run. So don't be shocked if we get a little bit of a sell-off. Actually, it would be warranted. And sometimes, because these stocks move up more than you think they're going to the upside, sometimes they come down, they move a little bit more than you think they might to the downside. I would be watching initially for a move down to about 3,900, maybe even that 50-day moving average, which is 3,830 and climbing. So let's watch this area. But the Dow Jones U.S. Semiconductor Index definitely looks like, as it was trying to make a breakout, you can see that PPO rolling over. That's normally not a great sign. With all the downgrades that I talked about earlier in the space, I suspect you're probably going to see a pretty rough day today on semiconductors, and we might even be down to that 3,900 level. All right, next up, actually, let me go ahead and save this. All right, next up is AutoZone. Let me pull up AutoZone here. Now, we just talked about turning point, so I really thought this would be another one, another example of a potential turning point. Now, the question for me here is, does AutoZone hold on to its 20-day moving average? Are we truly in an uptrend? Because if we are, we should hold that. Notice when we break out above this, we come down, we test the 20, we come down, get close to 20, keep moving up, and eventually we'll consolidate. But when you're in an uptrend, you expect that 20-day to provide you some support. So do we hold that? But in the meantime, until we get the breakout, I think it's pretty clear we are sideways consolidating off of an uptrend. Here's your uptrend, tops, and here's your bottoms. So 1,050 to about 1,185, that's the area that I would be watching pretty closely on AutoZone. All right, let's do one more quickly here. And my final one is Fastenal, F-A-S-T. Loved this earnings report the stock came out with, but it has been trending lower and lower, and it actually is hitting a price support. A couple areas I would watch on the stock. There is your breakout, pretty close. Here was your pullback after earnings, where it stopped at 35 before going back up. Now we're back to 35 again, and there's your gap support. I think this 34, 35 zone is going to be pretty important for Fastenal, so I would be watching that level. And those are your 3 you must see. Do want to thank all of you for coming in today. Always a pleasure. Love these shows. Be sure to tune back in for our next Trading Places Live, which will be on Tuesday. Have a great day, everybody.